Hello everyone, my name is Naomi, aka Nifty Nomi, and welcome to my channel, Be That Business. I'm a Canadian bookkeeper and a new business educator, and I help entrepreneurs look under the hood to see how it all works. I'm fighting the good fight against double work and against giving CRA more money than you have to. I've been putting out useful and interesting newsletters twice a month on the 14th and the 29th. If you prefer to read your newsletters, check out my sign up link in the description below. And there's also a link to a transcript of today's newsletter. On to today's newsletter. Hello, welcome to March 14th, 2024. If you have employees, let this be a reminder. March 14th, payroll taxes are due. Save time, pay online. Save money, pay on time. Last month, I began a series about reading your financial statements. Here's a quick recap. There are two main reports that list all of your GL accounts, the P&L and the balance sheet. The profit and loss, or P&L, is also called the income statement. Same report, just different names. I refer to the P&L as how much so far, and it has a start date and an end date. So how much between two dates. It has your incomes and your expenses. I refer to the balance sheet as what you have and what you owe, and it is as of one specific date and time. In the description below, there's a link to last month's newsletter. Now, on to this month's hacks. Business hack number 1. Understanding transactions. Transactions are the meat of your financial statements. Understanding how transactions work help you to understand the financial statements. Every transaction that a business does has two sides and it must balance. For example, if money comes in, where does it come from? If money goes out, where does it go? There are often more than two different GL accounts that are affected by a transaction, and they often affect both the profit and loss report and also the balance sheet. Let's look at a practical example for a consultation business. If a consultation is provided and invoiced to a client, the one side of the transaction is income goes up and sales collected goes up. Let's say it's Ontario, so there may be, let's say, $1,000 in income and $130 in HST collected. So these two numbers add to $1,130. But we need to balance this entry. This is only one side. We can't just put in 1,000 and 130. Like, if we did, then that's just an Excel spreadsheet. That's not bookkeeping. What's the other side? Generally, this would be an invoice in the bookkeeping software, and when an invoice is created, then accounts receivable goes up. AR, accounts receivable, is what people owe the business, so it's a type of asset. And so the other side of this entry would increase accounts receivable on the balance sheet by $1,130. Business hack number 2. How do transactions affect the financials? Let's imagine what the financial statements would look like if only this one example that I just referred to was entered. There would only be one line on the profit and loss. It would be the income, and it would be $1,000. That's it for the P&L. The profit would show $1,000. Then, on the balance sheet, the accounts receivable would be $1,130, and also the HST payable would be $130. But this doesn't balance. And here I give you the key to understanding the balance sheet. As you may have heard, or maybe this is the first time, assets equals liabilities plus equity. The asset of accounts receivable, so that $1,130, it equals the liabilities, which is $130 payable to CRA, plus the $1,000 that is on the profit and loss. That's the connection. Down in the equity section of your balance sheet, you will likely see 3 general ledger accounts. Shareholder equity, which is funds put in from the shareholders. profit for the year, so that's the current profit on the current P&L, and retained earnings, which is the accumulated profits of all of the P&Ls from the past. That's how the balance sheet and the profit and loss are linked. You know when you double click on a folder on your hard drive and it opens up and you see a bunch of files and folders inside? That's what profit for the year is like. If you double click on that profit for the year, boom, the P&L opens up. Business hack number 3. So what? When people look at their profit and loss report, they often think in context of cash. I made $1,000. But the transactions on the profit and loss don't reflect cash. Cash is not always part of these entries. The example that we just discussed didn't even touch the bank at all. Cash flow is a completely different report, and more to come on that in future newsletters. The profit and loss and the balance sheet need to be interpreted in a more holistic view that takes a bit getting used to. The more you sit with your financials and analyze them, the more comfortable you will feel with how to interpret them and use them to make informed decisions for your business. Some other examples of how the P&L doesn't reflect cash that may be counterintuitive: loans and loan payments. You get a business truck, auto assets on the balance sheet goes up, and you get a truck loan. On the balance sheet, truck loan goes up. No touch to the profit and loss. Now, you start making payments on that truck loan. Often, it feels like those loan payments are an expense you have to be mindful of each month. Each payment reduces the bank balance. That's on the balance sheet. But the other side of that entry is split into 2. A portion of that bank payment pays down the loan balance, which is on the balance sheet, but a portion of that payment is also paying the interest on the loan, and interest expense is on the profit and loss. Another counterintuitive situation is if you were to spend $3,000 on a laser cutter. Your brain feels like this is a big expense for your business, but you will not see that expense on your profit and loss report. This laser cutter is not an expense because now it's something that the business has. It can be sold again. It is part of what the business has and therefore is worth. It does not reduce your profit, but it increases the assets. It is an increase to your equipment assets on the balance sheet. But Naomi, you cry, I won't sell that truck or that laser cutter for how much I bought it for. It loses value over time. To which the answer is depreciation expense, a topic that I'll tackle in the next in this series in April 14th Business Hacks newsletter. What are your personal tips and tricks for creating efficient processes? I'd love to share them in an upcoming newsletter and give a shout out to your business. If you found this video useful, don't forget to subscribe to my channel. I'm also on Instagram at BeThatBusiness. You can tweet at me or X at me. I'm at NiftyNomi, and I'm also at NiftyNomi on Twitch and TikTok. And you can find resources and courses about running a Canadian business on my website, naomiwilkins.ca. The video today was recorded in beautiful Gananoque, Ontario. Thanks for watching, and get out there and be that business that thrives.